Hey guys, it's Dave, your mortgage guy.com. And in this video, I'm going to break down everything you need to know about a manual USDA loan approval. But before I do, please subscribe to my YouTube channel to keep up with more videos like this. So a USDA loan, an amazing loan program. It has no down payment and there's going to be income limits for the household. So you've got that to address, and the property you're buying needs to fall in what was or is considered a rural area. Now this is going off of the census information. So it could have been a rural area 2 years ago and now it's not. And I'm going to put the links down below on where you can look up the income and you can look up the property so you can kind of do some of the research on your own. Now, USDA loans, like I said, an amazing program, 0% down payment. They are gonna have their own 1% fee that they roll into the loan, a lot like FHA has their 1.75% fee that they roll in. And while USDA doesn't have mortgage insurance, they do have their yearly fee that they're rolling into the loan, which at the time of this video is 0.35%. This is lower than FHA's, which is 0.55. An overall great program if you can qualify for it. But let's talk about a manual. So you went to apply and you got denied for a regular USDA loan. Can your loan get approved for a manual USDA approval? Many times you're gonna see that USDA requires a 640 credit score, which for most lenders, that's the case. But I'm able to do them down to 600. So that's already an advantage in case you don't meet that requirement. And that could cause you to get a manual in that regard because of the credit score. So if you got your loan was ineligible and it was a refer, so their approval system, or what's called GUS, issues this approval, then your front end debt ratio, which is your mortgage payment of your gross income, has to be 29%, and your total debts with the mortgage have to be 41% and under in order to have a shot at doing a manual USDA loan. If you got your loan was a refer eligible, so still not approved but possible, then for a manual you can have higher debt to income ratios than the ones I mentioned. You're gonna need compensating factors. What are some compensating factors that an underwriter is gonna look at? Number one is, do you have some months of reserves? So extra money left over for, let's say, in the amount of a mortgage payment, or in most examples, 2 to 3 months of reserves of your mortgage payment. The underwriter is gonna require to have a shot at doing a manual. You're gonna need to document your housing history. You're gonna need your credit that you've paid on time in the last 12 months. Maybe some alternative credit, car insurance, cell phone bills, electricity. You need to be able to get these compensating factors to make your file look stronger. This is specific to your underwriter. One of my underwriters has done many manual USDA loans, so she has a lot of experience on what is required on it. Your lender may or may not be an expert on this topic, so they may have additional requirements or not even allow it. So understand that, number one, they do exist, okay? USDA loans, the way they work is once the lender approves them, then it goes to USDA and they have to also approve the loan. So there's always a chance that your underwriter could approve it and USDA could deny it when they review it. But from talking to my underwriter who's a specialist on this, she said she's never had USDA deny a loan that she approved as a manual. So she knows her stuff. And so there it is. Everything you need to know about a manual USDA loan, on top of knowing that they even exist, right? And knowing what your options are. I hope you found that information helpful. If so, I would love to be your lender. Subscribe to my YouTube channel and stick around for this next video. I think you're gonna like it. Thanks, guys.